Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday, November 22nd edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel. As always, here with Joel Elconin and Dennis Dick. Got a full show for you folks today. We've got a lot of earnings still coming in. We're going to talk about the follow-through or lack thereof from last night's earthquake in Japan and the overall strength in the market as we're seeing in record highs across the board yesterday. We're going to have at 8:15 Ben Carlson on the show. He's the author of A Wealth of Common Sense. Joel, how are we doing the S&Ps? I know we're doing good. Tell me how good.
We're doing well here. We're trading up 5 points, 21.98. We've traded no lower than the close. The all-time high close at 21.93. Climbed into the 2200 handle, 2203. That's a target on the upside. Average daily range, 23 points. That would take us well into the 2200 handle. Big reversal in the crude market here is noticed by Flack UK. Just missed that October 31 high of 49.36. Hit 49.20. I guess if you were using that whole number 49 as a level, that was a good exit. Now, coming back, boy, I just don't like the way this 47 handle looks as far as support goes. Holding at 47.90. Gold and silver trading in the green here a little bit. Dennis, how you doing on this chilly Tuesday morning?
Chilly, I know. This weather is crazy here now. That's why I keep fighting this sickness here. If it would, we go from 70 degrees to 30 degrees, everybody gets sick. But let's talk S&Ps. Everything at record highs here. Spencer, what was that statistic you were telling me on the pre-market show?
Yeah, this is a good one. So the S&P 500, the Russell 2000, the Dow, and the NASDAQ all closed at record highs. That hasn't happened since December 31st, 1999, which was what? Y2K.
And we have Trump to thank for it. Isn't that amazing?
No
Joel,
comment.
You're quiet after that.
No comment. No comment.
No comment. I
Not
know.
talking
You don't
politics.
comment. If your wife's listening to the show, she would like that comment.
I'm not talking politics until 2020, and I'm looking forward to seeing who the candidates are going to be.
All right. Well, let's talk markets here. And we got some big earnings reports from last night, some from this morning here as well. PANW trading down 18 points here in the pre-market. Stock obviously disappointed here. Spencer, what did they say?
Q1 EPS 55 cents versus 53 cents. Revenues of $398.1 million versus $400.2 million. They do see Q2 adjusted EPS at 61 to 63 cents versus a 63 cent estimate. So low end there. Revenue coming in lower than estimates.
Looking here, $142.25. We are off the lows here. That's the good news. Obviously, the bad news is it's still down 18 points. What are some levels?
I'll just give you that pre-market low. As you can see, a spike bottom down to 138.50. Almost climbed back into the 145 handle here, 144.69. That's a double top on the 15-minute chart. When you bounce off the low that much, you think that the next time down things may be protected a little bit, as buyers kind of feel they missed their opportunity here under 140. Looking at the monthly charts, you don't have a lot there until the lower 130s. But for now, I don't think I can quite say the low of the day's in there. But 138.50, I think you'll see buyers stepping in ahead of that level. Above 144.69, your guess is as good as mine.
Couple stocks moving in sympathy. FireEye was down in sympathy last night, just about 20 cents. Well, it's down a lot more here now because we have Goldman Sachs downgrading to sell as well, putting an $11 price target on it. So not only obviously the PANW earnings hitting FireEye, but the downgrade from Goldman hitting it as well. Stock is traded down 5.5% here in the pre-market, FEYE, after consolidating for 3-4 days. Looks like it's resolving to the downside, and it kind of looks like a head and shoulders here now, just from the last 10 trading sessions. Three little highs there, right under $14. The head up there, if you look, four highs right in the same area around 14.50, and then putting three highs right around 13.95. I mean, and now you're breaking down. So kind of a little perfect head and shoulders. Not good news for FireEye shareholders.
Yeah, trying to find support in here can be tricky. I'm seeing a pre-market low. I'm seeing a couple different pre-market lows here. On one platform, I'm seeing 12.80. The other's $13. But regardless of that, you do not have a real good level to look on for support until 12.48. That was your low on November 7th. You had a trio of lows at 1375 area. Now that will act as resistance. So big run up and now giving it all back.
CyberArk, CYB, are also trading down here as well. It was down about $1 last night. It's trading down 50 cents here this morning, but offered down 60 cents at $54. So this one's another one that it was leaning on support at 54. If it does take that out, it starts to open up as well. And with two other stocks in the sector getting hit, you wonder if CYBR doesn't get hit as well.
Boy, a bunch of lows here at 54. So we'll see what happens. You had a spike down in CyberArk down to 53, even a little volume traded. Now you're bouncing up back towards that 54 area, and that was the area of 3 out of the past 4 lows. So 54 going to be a good swing number. 3 closes up here, right? The 54.50 level if it can go into rally mode.
Jack in the Box reported last night, JACK. I've never had a burger from Jack in the Box. Have you guys?
Yes.
Where they're just out in out west,
Yeah,
right?
they're out
Like,
west.
is there any that
Yeah.
are somewhere close to here that we could make a road trip and try Jack in the Box burger? Because I see the commercials all the time, but I have never tried a Jack in the Box burger. I'd like to try it. Where did you try one at?
I had one in Arizona, so not super close to where we
we're
are.
way out there.
But
So when we do a road trip to California, then we'll
Sure.
eat at a Jack in the Box out there. How was it?
It was fine. My Jack in the Box story is that you know how like every restaurant has like their own like lingo, their own jargon for their own menu or whatever, and their own made up words. My dad was unable to decipher the complex code that was the Jack in the Box menu jargon, and ended up with like a plain burger, like literally just like a meat patty with bun. Like that was it.
So you ordered the worst burger
He
possible.
didn't even get something on the menu. He couldn't even figure it out. So he was giving me a plain burger that gave him literally a piece of meat with 2 pieces of bread around it. That was it. It was great. That's my Jack.
What did you order? What was the name of your burger?
I don't remember. It was like 4 years ago.
Come on!
It was like 4 years ago. But that's my Jack in the Box story.
I haven't had one in, I don't know. There used to be one in my hometown of Monroe, Michigan.
There
and
was. There was
yeah,
one in Monroe.
there were some in Michigan. Yeah, there
Why
were.
did they close?
I don't know, man. I left there in 1981 and hardly been back. So it had been out of there for a long time. But you know what? Let's just talk about the stock, though. And here's one that I guess, Dennis, you had pretty high expectations going into it, right?
Yeah.
Trading at an all-time high, triple top here, right at the 103 level. So here you have, I guess you just have to blow it away. And even though they had a good report, looks like people are ringing the register here in Jack in the Box. You did have.
I don't think we got the numbers. What were the numbers?
What were the
Spencer?
numbers, Spencer?
Sorry about that, I forgot. Q4 EPS 98 cents versus 88 cents. Revenue $398.41 million versus $398.71 million. So a little bit of a miss there. They do see same-store sales increasing 2 to 4% in Qdoba, which they also own. Same-store sales flat to up 1%, and their fiscal year 17 guidance at 2 to 3% in Jack in the Box restaurants.
Not good enough.
No, I called 98. That's going to be your level of control here. We did spike down on the initial report, down to 97. Even a little volume traded there, but now just hugging 98, and that's going to be the key level
It's
for the
so
day.
low volume here too. Though only 1,000 shares are traded, so you could say that price discovery is still happening in this. If it does decide to really hit it down, 95 too. You had a couple lows back in August and September. That's a little bit of a big, more of a round number there. So not sure if 95 comes into play, but I think it's almost too early for us to use pre-market action when it's only trade 1,000 shares.
Well-
They also raised their dividend from 30 cents to 40 cents per share. Should mention that.
98,
Yeah.
Dennis. There's a double bottom there. Come on, look at that.
You like that little two double bottom?
There,
What's
yeah,
the
it was-
vacuum below it from the day before though?
Oh, that
What if
was.
it takes out
I
98?
just said
And the
it.
day before is 92.89.
Oh, I feel a lunch bet here. I feel a lunch bet.
I think I think it could see 95 before 101. What do you think? 95 before 101.
Oh man, that's so tempting. But you know what? I'm gonna have to pass
I don't
on
even
this.
have to get back to even. That's 65 cents below even.
Yeah, but there was.
I'm like just giving you money, giving you lunch here.
How many am I up? 4?
No, you're up one, I think. Two, you're
Yeah,
up
because
two
you
because
paid.
actually I had intent. I was going to come in, when you took me to that Coney dog place I wanted to buy, but then Phil ended up buying and I didn't get a chance.
Okay. All right. I'm still gonna pass on this one because you just made an all-time
Oh,
high, triple top there, or triple bottom the fight at 101. So,
I was close to
yeah,
getting
I'm
it.
passing. I'm passing on that
I
one.
feel good about this one too.
Yeah, I'm passing on. I know there was one last week I should have taken, and we
Yeah,
were a
see,
little
you're
lower.
hot.
No,
You gotta strike. You gotta strike when you're
I'm
hot.
slowing down here near the end of the year here, holiday
All
trading.
right.
All right.
Anyways, okay. Other earnings reports. Here we got Dollar Tree going the other direction. DLTR after getting destroyed on its earnings report last quarter, it's actually popping big time on this quarter. So everything that was happening bad at Dollar Tree is forgotten again.
Hell yeah.
$88.50. It's up 8% here. Spencer, what do they say that makes everybody love the company again?
69 cents versus 78 cents, 5 billion versus 5.08 billion estimate. They did raise their Q4 guidance as well. They see a buck 24 to a buck 33 as their EPS versus a buck 29. Revenue coming in higher as well.
Boy,
Yeah,
oh
up
boy.
6 points, Joel.
Oh boy, oh boy. Well, it's starting to get into this gap area here, so I'll keep an eye on 89.58. Doesn't look like we've hit that yet. And then you got a major gap between 89.58, boom, and 94.06. $5 gap there, but already up $6 today. I think if you start to get near that gap, 89, 89 and a half, you see some sellers here. I don't think it's going to fill the gap today.
All of these, I'm just looking through the other earnings from this morning here. They're all up here this morning. So this is the day, I guess, if you were buying the earnings reports, you were doing well. Campbell Soup is up $2 right now on their earnings report. DSW up a buck 50. CBRL, Cracker Barrel up 5 points. Hormel Foods is trading up 2 points. Also Burlington, BURL trading up 3 points. Everybody beat here this morning, Spencer.
What about, and you forgot about Weibo. Weibo beats by 4 cents on revenues here.
It's
Uh,
trading down though.
it is traded
So
on.
that's why I ignored it because it didn't fit with my theme there.
What is that? Is
You
that
know what? Weibo is actually, it reported last night, and I was watching the action on it, and it did pop initially up to over 47 bucks. Then it had the drop. Now it's back to flat. So I can't decipher what that means. Go up, down, yo-yo chart here after hours.
All right, let's just try and get a few quick levels here. Big bar yesterday. I guess you're right near yesterday's low, right? We went out at 40. No, boy, that thing had a big range yesterday. 44.58. I guess you just got to keep an eye on the close there. 45.61. See if they could keep it green off the report. If not, things are pretty slippery down here to 44.58.
8:15, we'll get our first guest, and we'll be back at you in just a minute.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we have Ben Carlson on the line. He's an author of A Wealth of Common Sense. Ben, how you doing on this Tuesday morning?
Great. Thanks for having me.
And so you spent a little time managing institutional investment portfolios. I guess you're still doing that. I mean, just talk about the institutions, their time horizons. What's it like being involved in that area of the business?
Yeah, so it kind of depends on who you're working with, but if we're talking about like endowments and foundations and pension plans with endowments and foundations, you're typically having a time horizon of forever. They're usually set up in perpetuity. So it's an interesting dynamic to try to invest for that length of time, but then also deal with board members and investment committees that want to know what's happening on a monthly and quarterly basis. Um, so it's kind of an interesting dynamic.
And what are they looking for? I mean, there's been some outrageous returns and, some of these high flying stocks and in the market as well. I mean, if you're a foundation or a hospital, you have a big endowment, man, you just want to, pay what bring in what you're paying out for the year and charitable donations and stuff. What kind of expectations do those institutions have?
Yeah, well, I mean, their expectations are relatively high at some points because they actually have to pay out 5% of their assets every year for to keep their charitable purposes so they can keep their tax breaks. And then when you add inflation on top of that, you're thinking 7 or 8% a year or so. Um, but then a lot of them also look at what their peers are doing. So they look at what Harvard and Yale are doing with their college endowment. Excuse me. And so a lot of times it's easy for them to sort of let those expectations get away from themselves, and that causes them some mistakes.
All right, let's turn to the bond market here. And boy, oh boy, I've got the 30-year bond up here, just falling off a cliff from the 177 level down to 152. Pretty much a foregone conclusion. Interest rates are going up in December here. How bad could these bond losses get?
So yeah, so I actually looked at this recently on my website, and the thing I think people are forgetting about bonds is that they all have a maturity date at some point, and they pay interest. So when rates rise, eventually you get a higher coupon, so you're actually earning more money in the future. But to get there, you have to take some losses in the present, and so I looked back at what some of the worst losses were for long-term treasuries and 10-year treasuries and 5-year treasuries. Um, and did a scenario analysis where if rates were to rise, 3% overnight, what would happen? And this is something that's never really happened before, but just to give people a sense of what would happen. And something like a 10-year bond, you'd see an instant 13% loss because your 2% yield would now go to 5%, and you'd get a little more income. But for something like the TLT, which is it's down 7% or so since election day, um, you'd probably lose upwards of 30% on that bond.
But we're not going up 3%. It may be ever, in fact, overnight. I mean, what about one a hike or two hikes here? What are your expectations for, let's say, the TLT?
Yeah, so like I said, since election day, TLT is down roughly 7%. It's down, I think, 13% since rates sort of bottomed. And so the way to look at it is, what's the duration of the fund? And so the TLT duration is roughly 18 years. And the rule of thumb is typically for every 1% move in interest rates, the bond or fund should move about 18%. So a 1% increase in rates could see TLT drop close to 20%.
All right, let's move on here. You write a little bit about algorithms. We talk a lot about high frequency trading, their effects on the market. Talk about the limitations of algorithms.
Yeah, so I actually looked at the election, and one of the stories I found was that President Obama in 2008 was actually one of the first people to really use algorithms in his campaign, and it gave him a really huge first mover advantage. But then by 2012, it was sort of the kind of thing that everyone did it. And then by 2016, they said Hillary Clinton had one of the most sophisticated algorithms that anyone's ever seen. But it actually missed a lot of things for her. It missed some of the regions that she should have been focusing on. It missed how voters were actually thinking. And so I think people have to remember that people are the ones that are they're building these things. So they're not infallible. They can't predict the future. I think they can help make your lives more efficient, but they're not the be all end all.
We talk about technical analysis and fundamental analysis. You've used the term evidence based investing. Explain that for our listeners.
Yeah, sure. So I think in terms of evidence, I think you just have to have a reason for everything you do. So I think a lot of people sort of default to their gut instinct when making trades and decisions, and I think that's usually when people make mistakes. So I think in terms of using evidence, you have to know what you own and why you own it, and you also have to have a reason for everything you do.
All right, we all have good habits and we all have bad habits in our everyday life, but what are some of the bad habits of investors?
Yeah. There's a lot of them because as human beings, we're sort of irrational, or we're an irrational bunch. One of the biggest ones I think is that this idea of the disposition effect, which is investors like to hold on to their losers and sell their winners. Um, and I think especially today, when we see new all-time highs in pretty much across the board in all U.S. stock markets, people have been worried about all-time highs since they broke out again in 2013. And it's really easy to assume that simply because stocks are at new all-time highs, that means they're going to crash immediately. And we've actually had close to 120 new all-time highs this decade alone. Um, and so I think every time it happens, people sort of remember what happened the last time that stocks fell, and they forget that over time stocks tend to rise. And so I think a lot of people probably have sold much earlier than they should have throughout this entire recovery.
And what about this quick rebound off the, if you look at it from the election, similar to a Brexit here, I mean, with this quick rally we had, is this a time to be afraid, or are you sticking with your mantra?
I think it's people are really jumping to conclusions, and I think now is probably a good time to step back and sort of, for a lot of people, say, I don't really know what's going to happen, because it seems like everyone is so sure of what the outcomes are going to be and what the next 4 years is going to hold because of the president. But I don't really think it's ever that easy in the markets, and I think there's certainly a lot of people who missed what was going on in the election for the last 12 months or so. And so for people to assume that they know exactly what's going to happen going forward, I think that's a little overzealous. So I think stepping back and kind of letting the dust settle a little bit is probably not a bad idea here.
All right, another article I saw, or some comments that you made about starter houses and buying a starter house. Is that a bad move?
Yeah, so I've been getting a lot of questions from young people about buying a starter home, and I've seen this a lot with my friends in the last 5 or 10 years. And the reason I say that a starter home is a bad purchase is because a lot of people will buy something and they'll move within a couple of years, but the break even on a house is typically in the 3 to 5 year range, because you're paying closing costs, you're paying the first 5 year mortgage. If you do a 30-year fixed mortgage, you're paying roughly 2/3 of your payments are going just for interest costs alone. So if you buy a starter home and want to move within a couple of years, usually it's a money-losing proposition, because you're paying realtor fees, you're paying closing costs, you're paying interest costs, and so it's not usually a good idea to sort of hop around and trade up when you're buying homes.
All right. Before we let you go, I mean, big rally in the market. Some sectors, the financials, some of the materials sectors have really taken off here. Do you have, any sectors or issues you think that, maybe, a little bit behind, may get caught up with the rally? And are there any sectors here that you think maybe a little bit overdone on the upside?
Yeah, no, I think it's interesting, especially since election day. Anything that is tied to a yield pretty much has gotten killed. So utility stocks are down 5%. Bonds are down big. Obviously, financials are up 11 or 12%. Actually, the majority of the run up in the S&P, I think, is from financials. And obviously, rates are up and bonds are down. So again, I think people are maybe jumping to conclusions a little too quickly, and it's possible that things have gotten a little overdone on the rate side. And I think a lot of things that have gotten killed, like REITs and bonds and utilities, it could be an overreaction from investors, but I suppose we'll see.
We've been on the line with Ben Carlson. He's an author of A Wealth of Common Sense, giving us some common sense here on this Tuesday morning. Thanks a lot. We'll talk to you again soon.
Thanks for having me.
826. S&P still an up here, 4.5 points at 2197.50. Crude spent a little time here over $48 here. This is based on January contract. Now back down, made another low at 47.80. Dennis, what are you seeing out there in the markets?
Well, Ace was alerting us to. Sorry, sorry about the voice. I'm still fighting it here. That's why I had to actually leave for a couple minutes there. KalVista Pharmaceuticals, Ace was alerting us to KALV. There's mass confusion around this stock here this morning because it actually closed its merger with Carbalin Therapeutics, and there was a 1-for-14 reverse split here today. So looking at it, it closed at 67 cents if you're looking at the chart of KALV. But when you do the adjustment, the actual close is $9.50. Well, look at the trading here this morning in this thing. This thing actually opened up right down there, if we look this morning, just from this morning's trades, at 86 cents, 99 cents, $1.34, $2.17, and just kept climbing all the way up because people didn't realize about the reverse split. So you've got a lot of people here who bought this stock at $1.34. I saw 5,000 shares trade. I mean, you're talking about 5,000 shares, $8 too low. You're talking about $40,000 trade for that person. I'm not sure if they're going to come in and bust any of those lower trades, because if I had accidentally bought or sold it down there, I'd be pretty ticked off, that maybe the exchange or maybe somebody else didn't have the adjusted close correctly, because some platforms are showing the close down there at 67 cents. Others are showing the close at the adjusted close, which I believe is correct, is $9.50. So a lot of confusion around this here, but I believe what the close is, and like I said, I have some systems showing at 67 cents, some systems showing it at $9.50. But if it did do the 1-for-14, I believe the adjusted close is $9.50. So mass confusion here. Stock is now trading $8.50. So I do think that's where it closed. But if you were buying this at $1.34 this morning for 5,000 shares, wow, that's some big money really fast.
Yeah, I bet you they'll bust those.
They might bust those.
Yeah. Well,
so I wouldn't get that. Well, obviously it could be excited, but maybe they don't. I mean, it was kind of orderly. It wasn't like it just went down there. It was kind of orderly climb here. But I see another 5,000 shares trading at $3, another 2,000 at 383. I mean, there's been 41,000 shares traded this morning. Another 4,700 shares went at $5. Somebody's made some big money on this thing by just knowing that the adjusted close is $9.50.
All right, keep an eye on those. Keep an eye on those stocks with the reverse splits. Anything can happen.
Okay, so jumping back over to the earnings parade here, we kind of flew through them just on a few, but I do want to look here just at a couple of these charts here. Campbell Soup, let's look at CPB here, because yesterday I was trying to play the food stocks off Tyson, didn't work. So, Tyson was obviously down over 10 points. It's like, well, they're probably going to hit the chicken companies, but maybe they hit all the food stocks. They did right off the hop, but then they came in buying them there. So even Campbell Soup, if you look at the action yesterday, opened up near the lows, down just a little bit, and then rallied into the report. And now you Campbell Soup actually reporting and assuming they're beating here because it's trading up here. Spencer, how did Campbell's do last night?
$1 versus 95 cents on the EPS, and then $2.2 billion, which came in line on the revenue. As far as fiscal year 17 EPS, they see $3 to $3.09. 304 was the estimate, so right smack in the middle there. So pretty good overall.
Stock up $1.50 in the pre-market. 56, I was going to say, was a major number there. Go back in September, even November. We're above that here right now. So 56.90, it's been at 56.50. I guess the next major point might be the $58 level that we were looking at back in September. But Joel, this is your expertise. Where are the levels?
I like this one already here, Dennis. Trading up $1.86 here. Pre-market high comes in at 57.40. Bases the daily charts here. You got a couple highs at 57.89 and 58 even. Man, I like to say the high of the day might be in here, Dennis, but at 56.40 right here, I'll propose a lunch bet. I will take 55.80.
No.
And I'll give you 58 even.
No, I'm not chasing a food stock up.
Okay.
So, no, because these stocks, here's a few reasons why, I would be on the same side of the trade, which is a little more bearish than bullish. Just for the simple fact is these defensive stocks have been out of favor ever since Trump got in. So I think there's overhead supply in this one too. I mean, Campbell's has come back a little bit better than some of the other ones, but just a lot of people that are underwater who bought this stock in the last 3 months. I think those people might be looking to get some of their losses back here this morning. So I lean the same way as you on this, Joel. I'm a seller of the rally.
All right, all right. We'll keep an eye on the $58 level if it gets up there.
Burlington Coat Factory, they hit this down 3 points yesterday ahead of the report while they were hitting it, and they were wrong because this report is obviously good. It's up 10% in the pre-market here now. BURL. Spencer, what are the numbers?
Yep, pretty good Q3 EPS. 51 cents versus a 33-cent estimated revenues at 1.34 versus $1.32 billion. They see Q4 EPS at $1.63 to $1.67. $1.69 was the estimate there, so a bit lower on the Q4, but the Q3 looking pretty good.
This is like a huge TJ Maxx. I've been in these stores a few times here, and I like a deal. And you can go in there and you can get deals on pretty much everything. If there's something that you need in there, it'll be cheap. And that's the one thing. Burlington stores are very big stores there, and I just see it as like a big TJ Maxx.
All right, let's take a look in Burlington, trading at the highs of the pre-market session, 81.50 right there, right now. Boy, oh boy, I can't say the highs in with the way the chart's looking right now. 81.55. That's where you're trading. Just below that, that was your high on October 10th. And then you have one other high above that at 82.72. Pick your poison there, Dennis. I'll give you 82.50.
You're hungry for a bet now.
I'll take 82.50.
I offered you my bet already today, and you didn't want any
What
part
was
of it. I
that?
don't even remember I don't even remember what it was now. What was the bet? Isn't that funny? We both forgot it. And I was feeling good about it too.
It wasn't Campbell's Soup.
It was $98 stock. Who would it have been?
Oh, it was Jack in the Box.
Jack in the Box. The Jack.
Let's see how it's doing.
And I was taking 95 and I was giving you 101. Look, it's 98.30 bid. You'd already be like 30 cents in the money on that. You got to hit me on those bids.
No. That's a tough one.
I
But
threw it out there. All right.
What about it doesn't close over 81.50?
No bet here. No bet at all.
You're
on
tough.
Burlington
You're tough
BURL. You want me to chase something up 10%?
No.
I didn't make money 17 years chasing stocks, so I'm not going to start doing it on my lunch bets too. No chasing for me today on Burlington.
All right. What else we got in earnings land?
Well, let's move away from the earnings party because, like I said, it's CBRL. They're trading up 4%.
Barnes & Noble just reported a few minutes ago. You guys
let's
want
go Barnes &
you guys
Noble.
want to hear how bad they did?
Exciting.
Yeah,
The bookstore, that Amazon, we always thought would eat their lunch, but I guess they haven't completely ate all their lunch here yet. How'd they do?
Yeah, I mean, 29-cent loss versus a 34-cent loss, so yay. Sales sales 858 versus 859 $million. They do see their comps down in the low single-digit range for fiscal year 17.
You have the history of the earnings reports. When was the last time Barnes & Noble made money?
Let me
BKS.
look. I gotta look.
Because I remember them talking about going to be making money, and I don't know if that was over a year ago. They were saying, "Oh yeah, we see profitability coming up," but I have not seen profitability from the stock here in a while. When's the last time BKS made money?
When's the last time they made money or beat on a report? Last time they even made money. Whoa! Oh, look at that. Actually,
make money last quarter?
March of 2016. Yeah.
How much did they make in March of 2016?
$1.04.
Oh, they did make some money back then.
But then,
so the last 3 quarters they've been losing.
Yeah, but then they didn't make money before that. They didn't make money basically the same quarter of the last year. So
we have 1 quarter a year where this company makes money. The other 3 quarters they lose money.
Pretty
Not
much.
for me. No, thank you.
Pretty much.
Joel, what are your thoughts?
Interesting. It's not showing it on the TOS platform, but on my other platform here, I see a spike up to 1275 that was quickly snuffed out. There was a pair of highs up there above 1275, 1276, and 1290. So getting anywhere near $13. I think you see some major sellers, but I like to set up right here, right now. Double top, 1213, 1215. Still below it. That's going to be your resistance above that. Really a lot of air up there, closer to $13.
Let's talk the FANG, and I'm talking about the Facebook, Amazon, Netflix, and Google, because Facebook had the $6 billion buyback. That kick-started all of the other ones here, too. Facebook closing up over 4 points yesterday there. And now we look at the Amazon. It was up 17 points, and Netflix was up 3 points, and Google was up about 5 or 10 points as well. So Fang is back here, Joel. Fang is back.
Yeah, we were
Kramer's Fang.
we were a little off on this one yesterday. Thought, did you never try
I
to?
thought 120. I thought it would fail. I thought you'd run into some sellers at 120. It did the first time up there. It kissed right, if you look at the intraday chart, went right to 120 on the kisser and then fell back down to 119. Second time up there, though, took it out.
Yeah, it's still got a gap area to take a look at. After the earnings report, you have a pair of highs over 124. I'll alert you to those 124.18, 124.61. So, still little room to run here in Facebook. Green on the session, not by much. Your pre market high, we've backed off from quite a bit. Pre market high stands at 122.83.
What about Baidu here? BIDU. I just saw it trading up. Oh no, I'm sorry. I was looking at my wrong ticker. Baidu's up $1.21, so that would just be with the overall market. Just jumping back to Netflix here. So we're talking the Fang, and I want to talk Netflix. That 120 level. What are you thinking here? Like it's got up there yesterday. It got up to 118.72. This morning it's at 118.90. Did kiss over. It was trading over 119 just a little while ago here. Do you think the big psychological 120 level comes into play here now?
Ah, man, it's kind of hard, and these
Yeah.
stocks that move like this. I don't think 120 is a big level. No, not based on the daily charts, not based on anything. Just psychological. Maybe some people are thinking, oh, if he gets back at 120, maybe. To me, 122.97. That was your high on November 10th. That was a real bad day. That might have been an earnings day. So, man, 120. I mean, if it's a target, if something you have, boom, put the order out there. Seems like there's a little seller out here at 119 and change. The pre-market high in Netflix stands at, boy, I'm getting different things on all kinds of platforms. I'm going to go with 119.07.
Joel, what are your thoughts here on this overall market? I mean, here we've got all the major indices making new all-time highs. It always seems like something's picking up the slack. Even when you have weakness in one sector, another sector will be strong. It seems the money never seems to rotate out of stock. Seems like you get pullbacks here, like even on the FANG, and they come in and eventually they just start buying them here too. I mean, we're right back here and to buy the dip, and you're being rewarded for doing that here again. Is this just market just going to continue? Some people are saying this is going to continue right into December, go right into call this the Santa Claus rally here. We're just strong into the end of the year. What are your thoughts here as this market continues to just outperform? I mean, the market just continues to go straight up.
Are you sitting down?
Yeah, I'm sitting down. What?
Okay.
What do you
Well,
got for?
and I said this yesterday on the show. I said we've been making new highs, but by incremental new amounts, right? By a half a point, by a point, by a
Very
point and a
small.
half, right? So that
Yeah.
makes you think, oh, you have like the Brexit situation here, right? Where you had the big rally up and you just kept on hitting the same level, same level, same level, and then you ended up breaking down. But yesterday was a very impressive day in the market. The former all-time high was 2187.50. The former all-time high close was 84 and a quarter. You blew that away yesterday. So whatever shorts were hanging out here, waiting for this top and waiting for the pullback, similar that you had in August, it didn't happen. So today, very see if the momentum can continue. But they blew the doors off the market yesterday, and that was a breakout. All your underinvested pension funds and managers that missed this are going to be chasing near the end of the year. So
Yeah.
to me, yesterday was a very impressive day in the markets. The way we took out that new all-time high by 10 points. That hasn't happened in a long time. Maybe we'll have to get old Sean Udall on. I mean, through the thick and thin of this, Sean's been calling for 2450 in the S&Ps, and he's stuck to it. So we'll see. But to me, very impressive day in the markets yesterday.
I can't really get a feel for this, and I think what we need to do, and we haven't done it for a while, let's jump into the Big Ten here a bit, because the top 10 components of the S&P, because sometimes, when you're looking at it, you have this incremental rally, it's sometimes better to, instead of just looking at the chart of the S&P futures, to dig down into those top 10 components and see what the individual charts look like. And, let's go through them right now here. So number one still Apple?
Yeah, and you know what? This chart looks juicy here. Got hit
It
off the
does.
earning. Yeah, I mean, you don't want to be
It's
short.
my favorite one.
Yep, you don't want to be short this one. I mean, you haven't even hit a 50% retracement from the earnings. just battled back here. A little Trump, a little worry about that. But this one, I mean, I don't want to be short Apple here, at least until you get back to those pre-earnings highs.
Yeah, and it looks like a breakout here to me too. We struggled for 2, 3 days at 110, and then yesterday it looks like it's open to 115 to me. So I could see another 3 points of upside in the short term here in Apple. Second component, Joel. Who's number two?
Well, I go 11 now because if you put Google together,
Put Google together. We
okay.
don't separate. So put Google together.
So Google comes in at number 2, same kind of chart here. Hit after earnings, just filled the gap that you had back from August. Just coming back. I mean, once again, 50% retracement of this move. Here's another shot, stock that I just don't want to be short. I think in Google,
Yeah.
you could easily you had 3 highs. I mean, they're not exactly together. I mean, another 20 points, 790. I mean, not much in there.
So innovative, that company. It's so hard to bet against Google because the multiple is not crazy. I mean, the Apple multiple is crazy cheap. Google's kind of fair valued, but they're just so innovative. They're always coming up with new stuff there. So hard to bet against Google too. And I do own Google in my investment portfolio. So I think that one, I like that one too. What's the third one?
Mr. Softy here. You can't.
Microsoft's third now?
Yeah, Microsoft is
Wow,
third.
Microsoft
60.
is
Yeah,
back.
yeah, 61.37. You hit that 2 days after the earnings report. This one I'm gonna keep an eye on. $61. 3 highs right in that area. Someone's working out of the piece there. The last 3 highs between 60.95 and 61.14. So this one. Not shortened, but just pausing here at $61.
Well, it looks itchy like it wants to go up too. And you put Microsoft's chart into perspective. I mean, this is where it was 17 years ago here. Now you're back here with a multiple a hell of a lot less. It had a P multiple of like 70 back in 1999. Now the multiple's probably around 10 or 12. So it starts to get, maybe it's a little bit higher than that, but 2.56% dividend here too. I don't like Windows 10, which is why maybe I, say I dog the stock quite a bit. But I mean, this chart doesn't look that bad either. Number 4.
Number 4 comes in ExxonMobil. We talked about this stock trading range, nothing major. Let's get the daily chart here. Nothing major until you talked about the $88 yesterday.
Yeah.
I mean, this thing just hangs in there. You got the dividend. I mean, until you can get above 88. That's major resistance. I mean, hard to see this thing going back to all-time highs with crude, wallowing under $50. That 117.20, I don't know what happened then. That might have been a bad print here. But to me, this one looks a little bit more range-bound and super bullish.
88 bucks. I see $1.50 worth there, and then you're going to probably struggle at 88 again. So that's my bogey on that one. So not looking as good as the other charts. Who's number 5?
Amazon here, battle
Amazon.
back.
Look at this FANG
Yeah.
taking over.
Who was playing this thing near 700? Was that you, Angie Baby, or Turbine, or somebody I know was when this was looking terrible, like it was just going to drop through 700? I think they put a call spread on. Speak up in the chat. You made a nice move in this one. Amazon creeping back up. You think 800 would be psychological. Figure your 50% retracement here. That's coming in. All-time high is going to be a little bit tougher. 847 to, wow, man, it's saying 140-point move. You add 70 to that. 780, boom. You're trading above that. Gap to fill between 800 and 817. So this one looks like it's floating back up towards 800.
Yeah, 20 points. We're up another 6 points here in the pre-market trade on 786. So that's the psychological level that I look at too, is the $800 level. So maybe another 14 points potential in there. 800 though looks resistant to me, and we've come a long ways. So I feel like I'd be chasing this one. Number 6.
Number 6, you go to J&J. Now this one's been
Johnson & Johnson.
Yeah,
It's ugly.
It's ugly, but look at someone's making a stand here, Dennis, at a little bit under 115. You had the leak after earnings here. This one, I'll keep an eye on. When you get an institution, you definitely got a major buyer. Someone's stacking up. We are trading below 115 right now. But you look at these lows and these highs, 114.50 to 115 even. Definitely pausing here. Low of the move is quite a bit below that at 112.99. But you know what? I mean, are you there worried about like interest rates and going up 0.5%? Or I mean, I think like we've seen
I'm
this
not.
big. Yeah, that was pretty enthusiastic there, Dennis. But
No. So,
yeah,
and here, is another classic example of stock that's getting hit probably because it's a bit more defensive. Consumer staples, they do have a little pharmaceutical division, diversified company. Great company still long term here. I mean, you put it in perspective. Everybody, was chasing this up in the summer at 125. It's only 10 points off the high, though, 115. Stocks like this just aren't in favor right now. So that's why I think you take out that low. I think you could eventually challenge the 113 and below that too. So it's just not in favor here right now, but good company.
and moving on here, Facebook we already covered earlier in the show. Nice battle
That's number
pack.
7.
Yeah, number 7. Facebook going up, need that 124, then you gap to fill from earnings. The next one, old Warren's company. I don't know what you consider that. I mean, is it a financial? Is it a
It's
mutual
everything.
fund? It's everything. I mean, Warren has been hot. He picked up the.
Warren, he must be like Trump here. Look at what's happened to his stock since Trump, 145 to 158. He's up 10% since Trump came in.
He's been he's the the stock picker, right? He's picked up
Pick the right ones.
the airlines when they were cheap. He bought Icon's Apple stock from them in the lower 90s. I
He
mean,
did buy icons. That's a great point you just made. Who's made that point there? Carl Icahn got rid of his in the 90s, the Apple, and Warren bought it for him.
actually, I did an article on that. If we can
Did
dig
you?
it, yeah, we did it. And remember when Icon was like he talked the market down here? When was that? Was that post? That was a while ago. I'll have to look when I wrote that article here. But
Icon has really had, and his stock's come back a little bit here as of late, but he's had a rough go of it. That NAV in his fund has come down, down, down. And I mean, he's, also has the advantage of being an activist and buying and then announcing he's buying and watching the stock go up 5% after he announces he buys it. And he's still underperforming here. So he hasn't done as well lately.
And the next one comes in. Well, I'm not. It's not in the
This
top
number
10.
8?
Well,
This is
no,
bad.
this is not number 8. But I just want to. I have a vision, okay? And I think with his next filing, Warren's going to come in and say, "Yeah, I bought 7 trillion Wells Fargo between 44 and 46."
Probably.
Yeah. So that's
And then it'll pop again.
Yep. This
Everybody
one.
chases Warren.
This one I'm really kicking myself on. I just was buying it. I even bought longer term options. I was just buying the 29s and man, I made a little money on them, but I needed a
General
little.
Electric.
Yeah, General Electric. Now this one is forming a wall here, and the wall's at the $31 level.
Yeah.
Big institutional seller there. So this one definitely pausing when you see these many highs in a row at the same area. It's definitely someone working out of a piece. So until you can get back over 31, GE looks a little tired to me. The last 2 to round things up. And the reason we mention these folks is these 10, 11 stocks pretty much make 22, 23% of the S&P of the other. I'm not saying the other
The other 490 stocks make up 80%. These 10 make up 20%. So they're huge.
Right. This one, JP Morgan, boom, all-time high, 80.44. Now a consolidation. We'll see what happens in the consolidation period here. 3-4 highs in the same area, 78.50. Looks like someone's working out a piece there.
I still haven't forgiven you for talking me out of my buy at 30.
Yeah, well, you could have bought it at 40, 50, 60, 70, 80. Yeah, all the time. And
I haven't forgiven you for that.
And also, we talked
I
about.
hold grudges.
What about the Jamie Dimon low? Is that even on these charts here? Remember, we talked about what was that? That was in February, right? The Jamie Dimon low when he picked up. The market was looking in the abyss, looking like we were going to take out that $50 level. Jamie Dimon bought stock here at 52.5. Has never looked back. So these financials are moving, and then the final one falls into the J&J category, AT&T. I'm looking at this one too. For what's the yield on that now? 4.5%, 5%.
5.18%. I own it in my investment portfolio because I like the yield.
Yeah, and I do too here. We didn't chase it on the way up. We knew it was going to pull back at some point, hit 43.89. Now back at 36. Boom, we had a 14-point move here. Or no, excuse me, 13, 6.5. That was 37 and a half. So a little bit more of a 50% retracement. But look at all those lows at 36. That looks like a very good support to me.
Yeah, and the dividend does become attractive at that level. The only thing it's bounced off it a little bit, and these stocks still are out of favor, so I'm not going to chase this one either.
And just a
Well, that's the
technical. So
component. So how do you feel now after looking at the top 10? Do you feel more good about this rally here? Like we saw a little bit of, opening in Apple, a couple other stocks, looking, they've only had their 50%. There's room on the upside for some of the FANG stocks here still too. Are you feeling better about this rally?
yeah, I am. Like I said, I still think that move yesterday to me to put things in perspective, to blow out the all-time high like that, to me, and looking at the components, a couple of them will look a couple, look a little bit toppy. Maybe the financials, a little bit weakness on the your yield plays, but Apple certainly has the chart looks good here. Microsoft is digesting the move, so me, I'm not gonna get super bearish until we get a double or triple bottom in the spoos, and then we take that out. It looks like so far, things are looking cheery for the Santa Claus rally.
Stock imbalances. There's a few of note. Bank of America 269,000 to buy. BAC did take out its highs there from the last 4 days yesterday. It's moving up towards that 2050 area. It's probably the next bogey, and then after that, I'd be looking at 21. I mean, the rally just continues in these stocks here. Morgan Stanley is going the other way, although the stock chart's still going straight up. But there's 92,000 to sell here this morning. I'm looking at Pfizer with 158,000 to buy. Pfizer with a very quiet inside day yesterday. Pfizer only a 20-cent range here. That's pretty quiet here for Pfizer. Alibaba 55,000 to buy. That's pretty much the bulk of them. They're pretty small here as of yet.
All right, Alibaba, we're still just talking about the $95 level, pesky level. I was hoping it was going to get there yesterday. It didn't. Boom, you can't 93.41 trading up. The high since that low that it made at 87.88. It's been 95.30, still 95. Got to clear that for more continued upside in Alibaba. We got any stocks here from the chat that we're missing? Larry is looking at GoDaddy up in the pre-market on Big
It was an
Paul.
upgrade.
Yeah, who upgrade? We haven't done any ratings,
Oh.
Dennis. We got any ratings
There
for
was
him?
quite a few here too. There's not a ton of huge ones here this morning, but there was a few as of note here. I'm just trying to hunt down. Spencer, you have it in front of you. Who upgraded GoDaddy? I thought I saw B. Riley, but I'm going from my memory here, and it's
You
like
are
a
correct.
goldfish.
It was B. Riley. It was a $45 price target upgrade to buy.
So GDDY is trading up here in the pre-market. It's bid up here 35.42 right now. Best offer is way up at $40. Had a nice candle yesterday here, so I think it could start to look at that highs at 36.92 maybe as soon as today.
All right, let's take a look. I did see, what is that? A triple, quadruple top in there. I will find that for you guys and gals that may be trading GoDaddy. I mean, trading down. What's that print? Was that an odd lot print there? I see it down 33 cents, but no major resistance until you get up there in the middle of the
Off exchange.
36 handle. One temporary stopping point. Yesterday's high, 35.44. Above that, a group of four highs at the 36.50 level.
Yeah, when you see in FINRA, if you're looking at your tape and you're just do a quick 1 minute educational, when you see FINRA on your tape, FINRA trade reporting facility, those are typically trades that are happening off exchange. That could be a cross, it could be a lot of different things. It could be a late report from yesterday. That was reported at 4:11 after the bell yesterday, but had nothing to do with where the current price is. So when I see FINRA there, especially after hours, sometimes you can just ignore those more. Some of them are relevant, but for the most part, they're off exchange trades that are done, and a lot of those are just late to the tape. 35.42 is where it is bid here this morning, so it is bid up at 10 cents here, and it does look like it's going to be moving higher. Just moving other ratings here. You had Bank of America talking about all these utility stocks here this morning. Maybe Spencer can give us a quick summary here because BAC was doing upgrades or downgrades on about 7 or 8 different utility stocks.
Yeah, I got a few for you right here. So we got downgrading PCH from common stock to underperform. They're downgrading Grief Inc. GEF to neutral. Upgrading DTE Energy to buy. Upgrading Pinnacle West PNW to neutral. Downgrading PPL to neutral, downgrading NRG to neutral, downgrading CPN, Calpine Corporation to neutral, downgrading POR, Portland General Electric to underperform, and downgrading Entergy, ETR to underperform, and then Duke Energy also downgrading to underperform.
So downgrading almost all the energy stocks except DT Energy, DTE. So they are upgrading DTE and downgrading pretty much the rest of them. So that's an interesting call here. Joel, what are your thoughts on that? DTE.
DTE and the utilities. There's a big worry about interest rates and everything. I still would look at the yields at these kind of things and look long term. I know we had Mark Yusko on, and he called these like the worst investments ever, and it's had a nice haircut from them. But man, oh man, you look at the yield, capital appreciation. People are still going to be turning lights on and off and using these. So I don't know. I'm not running. And DTE 90 looks like a great support level. Currently trading at 92.28. Little 50% retracement here. Get back over 95, but. I'm not running and hiding from these things.
No.
Still good yields.
I'm looking at maybe buying some more on these things, and I've sold my Southern. I've sold a lot of my stocks here. I have a little piece of the Southern left, but I sold a bunch of it up at 52, 53 bucks when it just seemed overdone. Now that's back at 47. I started thinking my investment portfolio. I'd love to get back down to the lower 40s because I would load up on the SO. I originally bought it a few years ago when it was $40, and obviously I had over a 5% dividend back then. But here's the consideration is that the utility stocks are hated when the market's making new all-time highs because there's so much easier money out there as other stocks are going up. But we were 2 years of sideways market really here on the S&P, and you were getting paid the whole time 4 or 5% in some of these utility stocks. Plus, they were going up during that period as well. So there's a time and a place for utility stocks. Right now, I don't know if that's the time and place because everything is hot right now, so utility stocks are not. But I like them as a core holding in my investment portfolio because they do play a little more defense. A lot of people like gold, and that's defensive as well. I like utilities because it's defensive and I get paid. Where if you're just holding GLD, you're not getting paid anything. It doesn't have a dividend. So, I've got probably a good 10% of my portfolio in utility stocks. So I like them long term. I've lightened up here because of the big run they had in 2016. I'm looking to rebuy some here if they pull back a little bit further.
All right, we got a couple chatters in here. Our last stock of the day is going to be Freeport McMoran, just bunching up at $14. You see, you had all those highs there, and then he had the gap and go yesterday, trading up again in the pre-market. I guess you just look for a whole number here, a whole number of 15 even. You did hit that in the pre-market trading. Not a lot on the charts to give you anything at 15, just the fact that it's a whole number. Nice move up. You just want to keep seeing those higher closes. Close at 14.51 yesterday. So, comes back and touches that. As long as it keeps, showing you those green closes, then keep with it. Maybe move a sell stop or keep something in mind, or maybe try and find some nice premium on some 15 or 16 calls. Maybe lock in a little bit of profit.
Yeah, sometimes there's some different strategies to look at, locking in some of it without actually selling the position. But it's been a pretty big move. In a month here, we went from 10 to 15. That's a 50% move here. So you can't argue with somebody if they want to ring the register up here when it's coming in a big whole psychological number like $15.
All right, here we go. 8:59. Spencer, you want to wrap up the show and preview our final show of the week? Because Dennis and I are going to. Well, Dennis, you don't celebrate Thanksgiving, right? What do you guys have over there?
Wait. Do you?
I get to celebrate 2 Thanksgivings.
But do you celebrate our Thanksgiving? I don't remember if we discussed this last year.
I take the day off, so that's celebrating. Yeah,
okay.
I celebrate and watch the Lions. Oh yeah, I celebrate.
All right. Yeah,
I get to celebrate 2 Thanksgivings.
Joel, I'll miss you tomorrow. You're going to be doing the show remotely. From Casa de El Conan. So
yes, and then hopping on the road to Jersey to go visit my sister. So I'll be here tomorrow.
All right. If you missed any part of today's show, catch the whole thing again on YouTube, iTunes, SoundCloud, or Stitcher. Just search for Benzinga or PreMarket Prep. Also, don't forget, if you want a free 2-week trial of Benzinga Pro, you can call us up at any time at 313-723-2000 or go to pro.benzinga.com for that free 2-week trial of Benzinga Pro. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. On tomorrow's show, we got Tommy Lackey as our final guest on this abbreviated week, so looking forward to having him on and his relative gainers and losers, and nitrous scans. That's it for us today. Hope everybody has a good rest of your day and a good morning, and we can keep talking about Warren Buffett in the chat for the rest of the day, and we'll talk to you guys tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.